Hi everyone, this is going to be our Chapter 19 practice that we're going to go over for Accounting 2. There are 7 problems, so hopefully that'll give you enough practice to get comfortable with it. The chapter covers job order costing, which is where we're looking at more specific type of jobs. And then process costing would be those mass-produced items. So the first one asks us first just to tell which one would be considered a job and which one would be considered a job lot. So the job lot is where we're able to do things more often, and the more unique or customized would be a job. So let's look at those options here. So our first one is special order machines. We're thinking about that one. That one is actually going to be a job lot because we can make those over and over. So even though they might be a special order, the machines themselves can be made over and over. A handcrafted table is number 2. Alright, well that one's going to be something that's going to be unique. It's handcrafted, so that's going to go under a job. The next one is a custom designed home. Again, that's something that's unique. It's designed for that specific job, so that's going to be a job. A factory building. It's going to be laid out specifically for that factory. We're not going to do a cookie cutter factory. It's going to be for how that company needs to run things. So that one's also going to be a job. The next one down is a custom diamond wedding ring. Again, when it's custom, it's always going to be a job. And the last one, t-shirts for a class reunion. So while they might be specific shirts, we're going to run them in large groups. So we're in a lot. So that's going to be a job lot. All right, let's look at our next one. So again, some of these are pretty easy, pretty quick. Let's just look at them and see how we make out. All right, the next one, it says during the current month, a company that uses job order costing purchases $84,000 in raw materials for cash. It then uses $24,000 of raw materials indirectly as factory supplies, and it uses $53,100 of raw materials as direct materials. They want us to do the journal entry to record the 3 transactions. So our first one is when we're purchasing that $84,000 of raw materials. So raw materials is an inventory account. So we're going to debit raw materials inventory because we're getting inventory. So if it's increasing, we're going to debit it. It was $84,000. So we're going to debit $84,000. And then it told us that we were paying cash. So cash is going out. So that's a decrease to cash. We decrease cash with a credit. When we look at our next one for B, that is where we're going to be recording the $24,000 of raw materials that went into use. So we're using $24,000 of raw materials indirectly for factory supplies. So since it's indirect, it's going to go under factory overhead. So we're putting it into factory overhead for $24,000. And it's coming out of raw materials. So we're taking those raw materials and we're putting them into the process. So it's going to be under factory overhead. All right, our last one. We are taking $53,100 of raw materials as direct materials. Now, if it's direct materials, instead of using factory overhead, we're going to use work in process inventory. And remember, when we're doing that, we have 3 different inventory accounts. We have the raw materials inventory, work in process inventory, and finished goods inventory. So this one is going to work in process inventory, also known as WIP, for $53,100, and it's coming out of raw materials inventory. So we're decreasing raw materials inventory and increasing work in process inventory because it's going into the process of being made and it's a direct material. All right, let's look at our next one. All right, our next one, it says, during the current month, a company that uses job order costing incurred a monthly factory payroll of $228,500. Of that amount, $60,000 is indirect labor and the rest is direct labor. So we have two journal entries we have to do because we have to journalize the direct separately from the indirect. So we're going to look first at that direct labor, and then we'll do the indirect labor. Remember, direct labor goes into work in process. And it says that it's $228,500 minus $60,000. So $168,500 is going to go into work in process. And the credit is actually going to be factory wages payable because we're going to be paying them those wages on payday. All right, and then the indirect labor, goes into our factory overhead. And it is $60,000. And then if we go down to our credit, that is also factory wages payable. We just separate out what is indirect and what is direct into the proper accounts. Okay, so now that we've done the inventory entries to move from raw materials when we get them into the work in process, now we're going to look at the predetermined overhead rate. So this problem says that a company estimates the following manufacturing cost for the next period. They have direct labor of $472,000, direct materials of $189,000, and factory overhead. And they want us to first compute its predetermined overhead rate as a percent of direct labor. So we have to figure out how do we get that overhead rate? What are we going to use? Well, the formula in our book says that we start with estimated factory overhead, and we divide that by the base, whatever they determine the base to be. Now here it says as a percent of direct labor, so it's going to be estimated direct labor, and that's going to give us our overhead rate. So then we look at our numbers. All right, estimated factory overhead. They estimated that to be $133,000. The estimated direct labor was $472,000. If we divide that out, we are going to get an overhead rate of 28%. That 28% is the predetermined manufacturing overhead rate as a percent of direct labor. All right, now what if we did it instead as a percent of direct materials? We still take that same beginning, the estimated factory overhead. This time, though, we divide it by estimated direct materials. And that's going to then give us our overhead rate if that were the base. So our estimated factory overhead is still at $133,000. But now we look at what the direct labor or the direct materials were. Direct materials were $189,000. If we divide that, we then get an overhead rate of 70%. So we can see in this problem, if we use direct labor as our base, the rate is 28%. If we use direct materials as our base, the rate ends up being 70%. So kind of a big difference here. All right. So let's look at our next one. Okay, so this one, it says at the beginning of the year, a company predicts total overhead costs of $671,600. The company applies overhead using machine hours, and it estimates it will use 1,460 machine hours during the year. What amount should be applied to overhead to job 65A if that job uses 19 machine hours during January. So let's see, what kind of math do we have to do here? All right, well, we have to figure out the rate. So our rate is going to be equal to the estimated overhead costs divided by estimated machine hours. That was what they gave us as the base. It estimates, it says that the company applies overhead using machine hours. So estimated machine hours is what we're dividing by. So our rate is going to be our rate, if we do the math, is going to be estimated overhead cost of $671,600 divided by our estimated machine hours of 1460. So that's going to give us our rate per machine hour. So if we use our calculator, bring mine up and show you. We're going to see that we have 671,600 divided by 1460. That gives us a machine per hour rate of 460 per machine hour. And then we multiply that by the 19 hours that are used in that job 65A. So 460 times 19 hours gives us 8740. So the overhead that's applied is going to be 8740. All right, so that's how you get your rate and then apply it. And that's the amount that will be applied to that specific job. And then when we have our actual, we can compare it to see whether that applied was over applied, under applied, or just right. All right, so let's look at our next one. Number 6 has us doing journal entries. So we have a couple that are listed on the first page, and then we'll continue the rest of them on the next page. So it says to prepare summary journal entries for the following transactions. We have transactions A through G. So our first one we are doing, it says raw materials purchased on account for $88,000. So we're getting raw materials that goes into our raw materials inventory account. So raw materials inventory is increasing, so we're going to debit raw materials inventory. For that $88,000. And it says purchased on account. So it's either going to be by cash or we're going to set it up with accounts payable. Since it says accounts payable, or since it says on account, then that's going to be accounts payable for $88,000. All right, our second one. Now this one's broken down. We actually have 2 entries for this one because we have, it says direct materials used in production of $39,000 and indirect materials used in production of $17,800. Remember, they go in different places, right? So our direct materials go into work in process inventory, and that was $39,000, and it's coming out of raw materials inventory. Also $39,000. And then we have to record the indirect materials. Indirect materials goes under factory overhead. For $17,800. And then we credit raw materials inventory to take it out of there. All right, the second part of the practice will be in the next video.